The market has gone down significantly in the last 12 months. We've seen the Nasdaq go down 15%, so even if the stock market has recovered somewhat in the last month, your portfolio has probably taken a hit and you're now wondering, what should I do with my investments? Will the market drop to new lows, or is this the time to buy? Well, we think there are major opportunities right now to build a portfolio that in the end can create substantial wealth, but you need to know how to find the undervalued stocks. In this video, I'll give you my tips to identify undervalued stocks, and as always, you should not take this as financial advice and you should always do your own research, but this video could be part of that research. So, let's jump in. First of all, to find undervalued stocks, you have to know where to look. When searching for stocks, you should start with your own life and your own experiences. Think about the products or services you're using and if you're satisfied with them. An example is if you're using an iPhone and have a MacBook for work as well as an iPad for watching YouTube, then you could probably consider buying some Apple stocks as well. First-hand experiences with quality products or services is a great starting point for finding stocks to invest in. Another method to finding a potential investment is being up to date on the news. That doesn't mean you should go along on a business when there is positive news and sell whenever there is negative news, but it helps you understand the political and financial state of the world. Some great news platforms are Yahoo Finance, Bloomberg, and Reuters. A little side note though. Don't go for the riskiest small cap stocks on the stock exchange. The risk with those investments will likely result in poor sleep and personal economic loss. Many value stocks and great companies are at fire sale when the market is in a free fall. Examples of value stocks that we would regard on sale are Apple, which is down 23%, Microsoft down 31%, and Google down a massive 32% this year. But you may be wondering, how do you know if a stock is on sale in the first place? Well, before we dive into that, please hit the like button and subscribe if you found any of this interesting. If you watch a little longer, we'll reveal a tool that can help you with analyzing companies in seconds, and even better, it's free. Okay, so on this channel, we vouch for a combination of two instruments when analyzing potential stocks. The first one helps us find what or which companies to invest in, and the second indicates when to invest. The first instrument is called fundamental analysis and is used by almost every value investor as well as the living legend Warren Buffett. One of the first things Warren Buffett always looks at is the company's performance. Return on equity is a good metric to calculate this. Return on equity measures a corporation's profitability by revealing how much profit a company generates with the money shareholders have invested. Buffett looks at ROE to see whether a company has consistently performed well compared to other companies in the same industry. The higher a company's ROE percentage, the better. The debt to equity ratio is another key characteristic Buffett and other value investors consider carefully. We prefer to see a small amount of debt so that earnings growth is generated from shareholders' equity as opposed to borrowed money. When it comes to debt to equity, you're looking for a low number. This is because total liabilities represent the numerator of the ratio. The more debt you have, the higher your ratio will be. A ratio of roughly 2 or 2.5 is considered good, but anything higher than that is considered unfavorable. Now, the third thing we have to look at is the company's profit margin. A company's profitability depends not only on having a good profit margin, but also on consistently increasing it. This margin is calculated by dividing net income by net sales. A high profit margin indicates the company is executing its business well, but increasing margins means management has been successful at controlling expenses. Now, finding companies that meet these criteria is one thing, but determining whether they are undervalued is the most difficult part of value investing. To check this, an investor must determine a company's intrinsic value by analyzing a number of business fundamentals, including earnings, revenue, and assets. Once Buffett determines the intrinsic value of the company as a whole, he compares it to its current market capitalization, the current total, worth, or price. But calculating the intrinsic value of a company is not a straightforward process. Sorry. So we'll not go into detail with that right now, but there are multiple tools you can use to calculate the intrinsic value of a company. We've even made a free tool you can get in the description below. You'll only need to write down the ticker symbol of the stock and the tool calculates everything automatically. It's pretty neat, hey? The other instrument, called technical analysis, is not based on the company itself, but rather the share price action and chart patterns. It's not a requirement to becoming a successful investor, but it can help give you a better understanding of when to enter your position. There are a ton of tools within the realm of technical analysis, but we recommend only a couple. The easier the better. Don't be fooled by investing gurus with hundreds of lines and numbers on their charts. It's better to master a few things than not knowing how to use any. You don't want to be a jack of all trades but a master of none. So by combining the method of fundamental and technical analysis, you are taking less of a risk when you have found your next investment case. By utilizing the fundamental analysis tools, you can benefit from the technical analysis to time your entry. The methods we've gone through in this video are viable for both long-term and shorter-term investors. We recommend sticking to a long-term investment strategy unless you're a professional. The risk of losing increases immensely when entering and exiting positions multiple times. But if you've stayed until the end, thank you very much, you're quite the trooper, and please consider subscribing and liking the video, and as I mentioned, the free tool is down in the description below. And if you want to look at one of our company analysis, you can check out this video where we go in depth on Coinbase.